before we start, just for me, I don't know if it's my bandwidth or not, but not everything's not in sync at the moment.
Okay. Do you mean mentally or your internet? Okay, so but mentally you're good.
I don't know about that, mate. Let's face it.
Let's get into it then. So you've got a client who has given you an indication on an offer on a business, roughly $1.6 million. They've come from actually just not being too certain about their finance, and you thought they'd gone MIA. Now they've come back to you effectively with the price that the vendor will accept. However, they still have to get finance. They've been given an indicative approval from one of the sort of a second or third tier lenders. Now they're at the point where they're asking for more information to go and get more comfort around the finance. And I find this is really interesting because they want more information. The seller is like, are they making an offer? And no matter what, their offer has to be subject to finance. So how have you dealt with it, considering that the seller is wanting to be clear on what the offer is, the buyer wants to be clear on that they can get finance before they submit an offer? How do you bridge that gap?
Yeah, no, I think well, I think the first thing here is education, because the deal will be subject to finance. And we're at a point now where we really want to get into the due diligence phase of this. And I think if we try and operate it from where the purchasers are coming from, in a sense of just getting a bit more information, we're kind of pseudo doing that without doing it. And we don't actually have an agreement between the two parties to know that the intent is there to do a deal. So the discussion I had with the purchaser was, this is great. This fantastic news of where you are in terms of finance now, but let's now just move it into a slightly different gear, keep the momentum that we've now got from this, put together a non-binding indicative offer with everything that you've set out and you've discussed. For this particular client, I think it might be their first acquisition, I believe it is. So I'm just helping guide them through sort of a template version of that, so that it gives them a bit more comfort. They can then take that off to their advisors, etc., fine tune it, get it back to our client so that we can actually bridge that gap of, do we have an offer that's acceptable and two parties with the intent to get there? If we can get that agreed, fantastic. And then in parallel, we can then start to push forward with due diligence once that's done and the finance approval. And that information can then start to be released in a much smoother and more effective fashion to do their due diligence and the banks. So I think that's the way that I've discussed it with the client, to say, look, let's actually get this agreement done. Once we're there, then everything can really start to motor in terms of going to all the parties that need to sign off on that documentation.
And did the buyer agree to do that?
Yes. Yeah. I think coming back to the first word that I used in this conversation, it was just that education. I just think they weren't quite sure how it was going to work, at what stages, what would they need to have, whether it's conditional or even unconditional approval, finance, prior to having something agreed. So I think it's just working through with them that that's not how the process would work. And for their lender, they're going to need to see a signed or exchange of contracts happen first before they can then push forward with an unconditional finance approval.
And that's the key thing. When a buyer submits an offer that's subject to finance, it's subject to finance until after contracts are exchanged. So the subject to finance is a condition precedent. So either way, the vendor still has that hanging over their head that they can exercise that clause if they don't get the finance. And so as long as the vendor is well aware that that is the condition of the offer, and also when that clause gets exercised, or when that clause can get exercised, it can get exercised after contracts are exchanged. The challenge is, just like selling a residential property, any bank won't actually provide their unconditional approval until a contract is exchanged. So it's a bit of a catch-22. But you can't blame the buyer for thinking that they just want to have all of their ducks in a row before they start taking those next moves. But also the seller, the seller needs that momentum as well. So, mate, you've handled that really well. Sometimes it can be hard because buyers buyers, they don't want to do that. They want more certainty to start off with, and they certainly the less experienced buyers as well, or the ones that are buying for the first time, they just want as much certainty as they can when they start. And that can be really hard to navigate with the seller, because the seller's there like, well, how much more information do I have to keep giving these guys? I can't just satisfy absolutely everything they want. This is what we'll cover off in due diligence, but I need to know if they're serious. Like, we need to agree on terms. So what did you do next? You spoke with the buyer. The buyer agreed, which is good. And then what did you do?
Yeah, so created the sort of draft term sheet for them, which is what I agreed through the conversations to give them a bit more certainty, structure around that, and send that off to them. I'm just then going to probably follow up with a phone call very shortly just to see that they've got that. Any questions that they have, just around structure, intent, what some of the clauses or parts of it mean, just so they're really comfortable in it. But yeah, my hope is that will get finalised and we'll be able to put that forward to our client. But just coming back, Dan, I think the word you mentioned there, certainty, and how the buyer wants, all their ducks in a row, the certainty of finance, knowing everything's kind of going to happen. And I guess really for me, what comes through is that's the role that we're here to play. We're here to provide the certainty where it can't be provided through the mechanism that they're looking for. So we can give them that through knowledge, understanding, education, and structure. And I feel that's what's given them that, okay, brilliant. Yeah, we can move forward with this, understand the process now, and we'll start to follow that and we'll guide them through.
Yeah. The other thing that's interesting about subject to finance offers, and most offers are subject to finance in reality, is that they also come with exclusive windows. Most offers come with exclusive purchasing windows because the buyer is about to invest time and energy and cost in undertaking due diligence and then perhaps some legal fees. And so, rightly so, they want some protection. They want some security that the vendor isn't going to go off and sell the business to someone else. And that can be really hard to navigate when you've got a subject to finance, because the buyer is effectively asking for, I want your commitment, but I also have a backdoor out of this deal if things go wrong. And I'll call it, under the guise of subject to finance. And this is then when the discussion around deposits becomes potentially a different discussion as well, because we can start talking about, well, in exchange for this exclusivity, is this deposit a refundable deposit, or are you going to put some skin in the game as well? If you want my business and you want an exclusive window and I'm going to miss out on other buyers potentially, what are you going to put forward in exchange for that? That might be one of the next conversations that you're having with the buyer. Let us know how it goes.
Well, they're reviewing that draft term sheet, and I can assure you that was captured in there. So we'll wait and see how they view it.
Great work, mate, as always.
Fantastic, great chatting. Thanks, Dan.